Did you know that over 90% of traders fail to make a profit in the long run? But mastering reversals could be the game changer that sets you apart. When it comes to trading, one of the most powerful tools you can have in your arsenal is the ability to identify and execute trades based on market reversals. Why? Because it gives you the edge you need to stay ahead of the curve and capitalize on market shifts before they happen. In essence, a reversal is when the market suddenly changes direction, catching most traders off guard. And let me tell you, it's a game changer when you can spot those reversals and jump on them before everyone else does. Think about it. If you can master reversals, you can potentially turn losing trades into winners and make significant gains where others would be stuck in the red. However, I know that's easier said than done. Identifying reversals can be tough, especially for newer traders. But the good news is that with practice, patience, and the right strategies, you can become a master of reversals. So, in this video, I want to share with you some of the common difficulties traders face when it comes to identifying and executing trades based on market reversals. And more importantly, I'll show you some of the techniques and indicators that can help you spot those reversals like a pro. One of the biggest difficulties traders face is the sheer emotional roller coaster that comes with trading. When you're in a trade, it's easy to get caught up in the emotions of the moment. Fear, greed, hope, and anxiety can all play a role in clouding your judgment. And when it comes to reversals, those emotions can be even more intense. Imagine being in a trade that's going against you, and suddenly the market starts to shift in the other direction. It's natural to feel a sense of panic. And that's exactly when most traders make the mistake of holding on too long or chopping and changing their strategy. Another major difficulty is the sheer amount of noise in the market. There are so many indicators, signals, and opinions out there that it can be hard to separate the signal from the noise. And then there's the problem of confirmation bias. We all have a tendency to only see what we want to see, and that can be fatal when it comes to identifying reversals. Sometimes, we get so caught up in our own analysis that we ignore the signs of a reversal, or we convince ourselves that the trend is going to continue indefinitely. And let's not forget about the timing issue. Reversals can happen so quickly that it's hard to react in time. By the time you've realized what's happening, the reversal has already happened, and you're left playing catch-up. Traders also often struggle with the fear of missing out. They're so scared of missing the next big move that they jump into trades without doing their due diligence. And then there's the issue of information overload. With so many charts, indicators, and signals to analyze, it's easy to get overwhelmed and lose focus. Of course, there's also the problem of inconsistent trading. When you're switching between different strategies and systems, it's hard to develop a clear sense of what works and what doesn't. And let's not forget about the psychological demons that can haunt us. Fear of loss, fear of failure, and fear of being wrong can all hold us back from taking action when it counts. Finally, there's the issue of lack of discipline. When you're not following a clear plan, you're leaving yourself open to impulsive decisions and emotional trading. Now that we've covered some of the common difficulties traders face, let's talk about some of the techniques and indicators that can help you spot reversals like a pro. One of the most powerful tools in your arsenal is the ability to read price action. Understanding how to analyze charts and identify patterns can give you a huge edge when it comes to spotting reversals. Another key technique is using indicators such as the RSI, stochastic, and MACD to identify overbought and oversold conditions. You can also use chart patterns such as the head and shoulders, inverse head and shoulders, and wedges to identify potential reversal points. And let's not forget about the power of volume analysis. By examining volume patterns, you can get a sense of whether a reversal is likely to occur. Of course, there are many other techniques and indicators out there, from Bollinger Bands to moving averages, and from Fibonacci levels to momentum indicators. But the key is to find what works for you and to master it. Don't be afraid to experiment and try new things, but also don't be afraid to stick with what you know and love. I remember a time when I was trading the euro to US dollar pair, and I spotted a clear reversal pattern forming on the chart. I took the trade, and it ended up being one of my most profitable trades of the year. It was a classic example of a reversal. The market was trending downwards, but then suddenly shifted gears and started moving upwards. I was able to capitalize on that move, and it was all because I had the right strategies and mindset in place. So, what can you take away from this video? Firstly, mastering reversals is a skill that takes time and practice to develop. But with the right mindset and strategies, You can become a pro at spotting reversals and making trades that put you ahead of the curve. Secondly, don't be afraid to experiment and try new things. The more you learn, the more you'll realize how much you don't know, and that's okay. Thirdly, always keep your emotions in check. Fear, greed, and hope can all play a role in clouding your judgment, so make sure you're trading with a clear head. Finally, never stop learning and improving. The market is constantly changing, and you need to stay ahead of the curve if you want to succeed. Thanks for watching, and I'd love to hear your thoughts on reversals in the comments below. Don't forget to check out my other videos for more trading tips and strategies.